So welcome to the North Dallas Chamber of Commerce Business Toolbox event, virtual event. We hope to be able to reach more people with having it as a virtual event than an in-person because of the importance of this information that we're talking about today with the beneficial ownership information. The Business Toolbox of the North Dallas Chamber of Commerce is sponsored by Weaver, a CPA firm in downtown Dallas, Gray Reed, which is a large legal firm, and Texas Bank, or Texas Regional Bank as well. So we want to thank our sponsors for helping us promote these important events that we have. If you take a look at the North Dallas Chamber of Commerce website, ndcc.org, you'll see various different events coming up on the calendar this month and also through the beginning of next year as we go through the holidays and have some great insight into various different things that impact us here in the Dallas community from a business standpoint. So please check out that website. So I did want to go ahead and introduce our two speakers today. So first off, we have Crystal Cologne with Cologne and Associates, and Mr. H. Guy Smith with the law offices of H. Guy Smith. They will be presenting today on the beneficial ownership information reporting requirements that are needed. This video or this meeting is being recorded, so it can be shared at a future date as well. So with that, I will let Crystal and Guy take it over. Thank you very much.
Welcome.
Okay, thank you. Appreciate the opportunity to share some information with the group. This is something that some people have heard of, a lot of people haven't heard of, and it is something that it's got to be taken care of by the first of the year if you're some type of entity. The Corporate Transparency Act came about actually during President Trump's administration. And he vetoed it actually, but Congress overcame the veto. And it was mandated to take effect the first of next year. And the idea behind it is basically to assist the federal government in trying to track down what could be illegal activities like money laundering, tax evasion, things of that nature. There are a lot of countries that have similar laws, and this kind of helps us get in step with a lot of other countries in trying to subvert this kind of activity. And so primary purpose of it is to be able to determine who is behind or controlling entities. And so it's going to apply to basically any entity that is set up under some type, generally state law. If you've incorporated to create an LLC, limited partnership, something of that nature, this is going to apply to you. And the thing about it is you have got to report to FinCEN. Now, FinCEN is Financial Crimes Enforcement Network. And they're the ones who are overseeing this, and they're under the Treasury Department. And you have to report to them by January 1, 2025, what's called your beneficial owner information about your entity. And so that leaves you 42 days to get this done.
From the day of this recording.
Yeah. And so not a whole lot of time left, and a lot of people that I've talked to have kind of said, well, yeah, we're going to get it done. Well, now's the time to get it done. What is it primarily that you've got to get done, and how do you get it done? That's what we're going to be addressing today. And does it apply to you? And how do you figure out if you're a beneficial owner, and if you've got to identify yourself as someone of an entity that is a beneficial owner and has to report. So this act applies to any entity currently existing. And if you create a new entity, obviously it's going to apply to you too. This, like I said before, it's going to be corporations, LLCs, limited partnership, certain trusts that are going to have to be filing this kind of report. There are a lot of exemptions. In fact, in the Act, there are 23 listed exemptions. Primarily, those are going to apply to large companies, publicly traded companies with over 20 employees, 5 million in gross revenue. Any other regulated type companies like banks, insurance companies, where they basically already have this information, you're not going to have to be reporting it again. Anyone that has a license through the SEC, they're already in the system. So insurance companies, like I say, there are 23 different exemptions, but primarily for small to medium-sized Texas businesses, it's going to apply to you. And so again, if you've got if you're set up with any kind of document through the Secretary of State, then it's going to be one that you're going to have to comply with. Okay, so what is it? And well, you've got to file a report. Okay, and the report is really it's not that complex. It's really just figuring out what you got to have, the information you got to have in order to complete the report. The report is done online through FinCEN.gov. There is no mail-in ability. It has to be done online. You can create a PDF and work on it and submit the PDF, or you can actually just submit the report as you go through the information they're requesting. Primarily, yes, you're going to have to report your name as well as any trade names, where your address or where you're doing business, cannot be a PO box, and where you were formed. If you were formed in Texas, then they would want the information about that. Your tax ID number is going to need to be reported for that entity. Now, this act does not apply to individuals, so no individual will need to comply with the
unless they're a business owner or a person of substantial control.
Yeah, well, the individual information is under the entity, but as far as any particular one individual having to comply with the act, it doesn't apply. It's only to entities. Then when you do get to reporting about your entity, yes, you're going to have to report what's called a beneficial owner, their information. And that information is basically going to have to be obviously a full name, address, and then you got to somehow submit documentation that shows you are who you are. And that's going to either be your driver's license or passport or some type of ID, official ID that's been given to you. Now, one thing you can do is get what's called a FinCEN identifier number. And again, you go on, I think that's the .gov where, like if you've got one of the, what's the number where you can get through the line at the airport easy enough? The TSA pre-check.
Mm-hmm.
If you've done that, you're going to go to that site and you'll enter your information and they will assign you what's called a FinCEN identifier number. And that will save you from having to include your information on the report. You'll just report your number and that'll be sufficient. Then you've got to, if you don't have the FinCEN identifier number, then you do have to prove who you are by submitting a digital copy of whatever document you're using for identification. Generally going to be either your driver's license or your passport. Okay, so what are some of the tax exempt, or not tax, just exempt companies? Again, those banks, companies in existence before 2021, if they're inactive. Well, what's inactive? That means not doing anything. That means you're not owning any assets. That means you're not You're not filing any reports showing any activity. You're not having income of over $1,000. So you've got to be able to show since then you have not been doing basically anything at all. Again, the large companies are exempt. Any SEC registered individual or company general partnerships are exempt. You know, you don't have to get certification from the state for a general partnership. Those are just created by contract, so they're not required to file. Like I said, insurance companies or producers, investment companies, financial advisors, people like that that have licenses already have that information in basically somewhere else. So again, any entity formed this year has to report, and obviously any entity previously formed has to report by January 1, 2025. If you were formed this year, then you had 90 days in which to get your information in. If you are going to be formed after January 1, 2025, you got to file this information within 30 days. Another requirement about any new formations or ones that were formed this year is what's called the company applicant is also required to provide their information. Who would that be? That might be someone like me who helps you file the report. Well, I got to give them my information similar to a beneficial owner, address and identifier and all of that. So that's also a new kind of quest for any companies this year or later that are being created and reporting. Now, the thing about the reporting is if any of your basic information about your company changes, you got 30 days in which to report that information. That would include change of address, change of company name, change of beneficial owners. That's just something you're going to have to keep up with if something like that happens. You should, change of address and stuff like that, or names should be also being reported to your Secretary of State and getting that information changed with them. So that would also be a reason to get that done here. So the beneficial owner is going to be someone, an individual, obviously, who is directly or indirectly through any contract, arrangement, understanding, relationship, or otherwise, which makes that very global, either exercises substantial control over the company or owns or controls at least 25% of the company. Yeah, you want to jump in on that?
All right, great. Well, thank you so much, Guy. You did a great job. I'm just going to back up one. So this act, it really just wants to talk to not so much the entity, but who's running the entity, who's the man behind the curtain, right? It wants to know all of that. So it really wants to collect all the persons of substantial control, right? It really wants to know who are the ones making the decisions. It wants to know who are all the CEOs, who are the managers, directors, trustees, and beneficiaries of that entity that's involved, right? And more importantly, they want to know who has influence in that company, who can appoint and remove senior officers and make key business decisions. So as you see in a handout that the chamber will submit to you, we've talked about the persons of substantial control, and this graphic is directly from FinCEN in their definition of what type of senior officer in your entity has to be on your report. So you have a senior officer, which is a president, CFO, which is a chief financial officer, your general counsel, your chief executive officer, your chief operating officer, and any other officer with any other title you choose who performs a similar function. All right. Another person that would have to be on this report is anybody with the appointment and removal authority, with the ability to say you're a part of our group or you're no longer a part of our group. Another person that they want to know about is who's helping you make important business decisions. Okay. As you see here, any individual who directs, determines, or has substantial influence over important decisions made by the reporting company, including decisions regarding the company's business, such as the nature, scope, and attributes of the business, selecting or terminating business lines, ventures, or geographic focuses, the entry or termination of fulfillment or non-fulfillment of significant contracts. It wants to know who's that guy that's helping you make, who's helping that entity make that decision, or woman. When it comes to finances, who's helping that entity decide on sale, lease, mortgage, and other transfer of any principal assets? Who's helping them make major expenditures or investments or insurances of equity or incurrence of any debt at all? You know, who's approving the annual budget and the operating budget? They want to know that. They want to know what's the compensation schemes, who's making decisions on compensation schemes and investment programs for senior officers. They want to know that person too. They also want to know the guy or girl that's helping you structure your business, who's helping you reorganize or dissolve or merge. You know, who's making your amendments of any substantial governance documents, who's amending any articles of incorporation or similar formation documents, who's updating the bylaws and making changes in those bylaws, or any significant policy or procedures. They really want to know who is the person of substantial control. And any other fancy catch-all you may say, this is so-and-so that's doing this, well, they want to know that too. They want to know whose control, as you see here in the catch-all, any other form of substantial control over the reporting company. Control exercised in new and unique ways can still be substantial. For example, flexible corporate structures may have different indicators of control than indicators included here. So that's to me is a very broad catch-all. Whoever you're talking to, basically, as an entity, they want to know. And that's the information that Guy was talking about, that you have to give their address and identifying information in the report. And anytime that changes, you have 30 days to make that update. The other piece that I wanted to bring about conversation-wise is the inactive entity filing. So a lot of people say, well, I closed that business in 2022 and I'm not dealing with that no more. Well, that's cool, right? I mean, in a way, that's fine. That's your choice. You can choose to not deal with that entity. But as far as FinCEN is concerned, if you don't fit under the exemption of the inactive entity, then you're going to have to file this and provide the substantial persons of substantial control for that entity. And if you can't reach those persons, what do you do then, right? That's when you have a further conversation with Guy and I, and we can help you. Okay. Also your company applicants, like Guy was talking about, when you have a company that was made on or after January 1, 2024, you're going to include your company applicant, like somebody like Guy or myself or anything else, any other entity or person that's helping you create your business or make changes to your business. You also have to remember that if you had a company prior to 1/1/24 and you're still required to file, you may not have to file that company applicant. What does that mean? Well, there's 3 sections. If your business was created before 1/1/2024, you're only going to fill out the first 2. You're not going to fill out the third, because that part does not apply. And just to circle back, I see there was an error in the slide there, but an inactive entity, these are the pieces that we need to look at when you tell us that you have an inactive entity. We want to know, was it formed and conducted business after 1/1/2020? That's the cutoff, by the way. Any business that was active to its definition of being active, not a true inactive entity, which has no business, no assets, no checking account, no real estate, has nothing before 1/1/2020, does not have to file. If your business closed after that, it has to file. If your business closed before that, but still has checking accounts, owning real estate, all of that, it has to file. Okay. If that business is changing ownership at any time, even if it's an inactive business, but it's getting ready to become active and change ownership, it has to file, right? we want to make sure that people understand the difference between, you know, does my inactive company have to file? So get with us if you need a little more clarity on that, right? And we have some questions here. So, you know, you want to ask yourself, is the company still registered under any state or tribal law as a corporation, LLC, or similar entity? So if it's not still registered, then you don't have to worry about it. But if it's still registered inside that database, you gotta go to the next step. Does the company conduct business or hold assets, bank account, real estate? If no, you can proceed to see if you have the exemption. Right, the next question, does your company qualify for the inactive entity exemption under the BOI rules? Which means it was formed before 1/1/2020, has no business operations, no assets, and no ownership changes. If not, then we need to help you understand the documents you need to gather and upload to FinCEN before January 1st, 2025. Okay, you want to talk about trust?
Well, okay, trust maybe is kind of the answer on that. It depends on who the beneficial owner is, who established it, and who the beneficiaries are, and what the trust provides in the way of basically who's entitled to what and who's entitled to control what. And so there are numerous guidelines under the BOI that apply to trust. And if you have a trust, you basically need to get with someone who can review your trust and determine if that trust is one that is going to have to report and who the people are that are going to need to report. One thing that doesn't have to report, if you've got a charitable entity, those are exempt. So
Right.
charities that, 501(c)(3) entities that have been granted charitable status by the IRS, those are largely exempt. But they like to say with the trust, there are a lot of different qualifications that may or may not make it one that has to apply.
Right, so we went over some of this. You want to talk about what happens if they don't report?
Yeah, okay, so if you don't report, they put in some pretty stiff fines and penalties and even a criminal fine of up to possibly 2 years imprisonment for failing to what's called willfully. Okay, someone who willfully provides false or fraudulent information. Okay, so what's willfully? Well, a legal definition that is sometimes used is voluntarily and intentionally and with the specific intent to do something that the law forbids. So if you know about this act and you ignore it, have you willfully done something wrong? It's really applying to the false information or fraudulent information, it would seem like. And so if the information you provide is wrong, then it might be very difficult to say that wasn't willfully done. Now, the penalty could be $500. It started out at $500, but it has an inflation on it qualifier, and so it's currently at $591 a day for a violation. And a criminal fine could be up to $10,000, 2 years imprisonment. So they're very stiff, significant penalties for failing to report. Now, they do give you a kind of safe harbor with voluntarily complying within 90 days. Then that may knock out the possible penalty requirements. Now, whoever's filing this information, they're the ones that are saying it's true and correct, and they're saying that the people that gave them that information told them it's true and correct. So either one of those could be the one that could face the potential. Yeah, either one or both could face a potential fine or whatever. And I'll just tell you right up front, that has made me very careful about anyone that I might help in filing these reports. And frankly, I won't do it unless I know the person and have met the person, because If someone sends me something online, a copy of a driver's license or passport, I don't know who they are.
Mhm.
Now, for people I've known and done work with for a long time, maybe a little different, but anybody that's submitting these reports, they gotta be very careful that they know what their information they're providing is true and make sure it is, because you could be responsible for that if it turns out not to be.
Right, in our firm, we have a practice of asking for 2 years' tax returns if we didn't file your tax return, but we're helping you file the BOI. Right, we wanna make sure that there's information is consistent, because again, we're both on the hook here. And once again, if something changes, you just have 30 days to report the change, right? And that's adding or removing any beneficial owners, adding or removing any persons of substantial control, changing your residential address of a beneficial owner, changing the business address of your company applicant. You know, right? Someone like us, we have to let you know, hey, I moved, right? A large company that no longer qualifies for the exemption, right? They have less than 20 employees, or they made less than $5 million, because that's the exemption. You have to have more than 5 million and 20 employees for the large company exemption, right? And if the beneficial owner passes away, the update has to happen when the beneficiary of that owner takes present interest, becomes a present interest, then they have to go on the BOI. So, did I catch that right?
Yeah.
Yep.
Yeah.
Okay,
Mhm.
great. So, best practices, keep a list of what everybody's telling you. We can give you guys like a spreadsheet you can make and just update it. And then when there's something to be changed, if you need our help, we're always here, right? But at least you guys will have something to say, okay, these are my current BOI structure, right? And we can happily provide you with that to the chamber. And your key filing deadlines, you have 30 days from the day of incorporation in 2025, but currently there's 90 days, right? If you started a business today, you have 90 days to complete this BOI. We should have updated that.
Yeah.
That's okay.
Mhm.
But still, any changes, you got 30 days, and there are stiff penalties for non-compliance, and that's where we are. So if you have any other questions as to where to file, you guys can file directly yourselves at this website at FinCEN, right? Or you can have us help you out. And thank you for attending.
Okay, so before we get away, I got a question for you. Let's say you live in Texas, you created a Texas LLC 3 years ago. You're married, and you created it while you were married. And you're the only member, so you claim or own 100% of it. Who's the beneficial owner? Okay, it's rhetorical. So beneficial owner is you and your spouse. Because in Texas, everything's community property acquired during the time of a marriage. So your spouse owns interest in that business, 50% technically. So you would have to report your spouse as a beneficial owner in that situation. So, there are a lot of things you got to look at because that definition of beneficial owner is so broad that it could encompass a lot of people. You can be fined for not reporting, but you can't be fined for over-reporting.
Amen. Yeah.
So
That's
the
right.
best thing to do is just to make sure, caution err on that side of it, and make sure you properly report who those beneficial owners are.
Wonderful. So we're ready to take any questions if you have any.
Yeah, there's one in the chat from Dawn. She asks, how much does this cost?
So it's free to file it by yourself with FinCEN. We charge $99 per respondent if you ask for our help.
Okay.
I have a
Amy?
question.
Yes, Amy?
How long would it take if we were doing it ourselves versus obviously the ease of handing it off to you?
Sure.
So if you get your information together before you start, meaning go ahead and get your driver's license so that you can digitally, attach it to the application. Get your corporate information, where your certificate of formation, what you get from the Secretary of State that has all your corporate information on it. You should have your address and all of that available. So if you got your information right there handy, you can do it in
Take about
10,
20 minutes.
I'd say 10 minutes.
10 minutes, yeah.
Yeah. It's not that complicated. In every basic information request, then they have a little thing there that says learn more. So if you have a question about whatever it is that one's asking about, you can punch on it and it'll give you some more information about, okay, here's what we're looking for, or needing, or whatever.
Mhm. I see people really needing our help if they engage with other people to make decisions. Right? That's where that substantial owner comes in, and we kind of should go over, we created a worksheet and we go through that. Who should be on this report? Right? So we help you understand that. And the same thing with the inactive entities. Right? If you serial entrepreneur, create one, close it, create it, close it. Some of those may need to be filed. So we'll sit with them and say, like today, I just got somebody with 3 companies that are inactive, ready to start a new one. And all 3, after doing homework, they all have to file. And those companies each have 4 persons attached to it. So it's one of those, it can blow out quickly depending on your scenario.
So one other question from Paul. In a liquidating company where the debts to the secured creditors are greater than the values of the assets, who is the beneficial owner under FinCEN?
It still will be the owners.
Yeah, whoever
doesn't change.
would have had those assets, the fact that they're pledged or owed or whatever else, doesn't really matter. It's who owned them.
Right. It's still the reporting entity has to file, and the substantial owners and whoever's helping them make decisions on that debt.
Yeah. So it could be more than one person, obviously.
Yeah.
Because there's 2 qualifiers there.
So if you're working with a bank to issue debt, then you would need to list.
Who's the person? Do you have a consultant outside of the bank in that scenario? Is there a consultant outside of the bank helping you make those decisions? That person would have to be on your substantial control.
Okay.
Did I get that right?
Would it be a
Whoever-
CPA attorney or
Like I
anybody
say,
else?
it's 2 qualifiers, substantial control or ownership.
Right.
And so you just have to look at whoever those people are.
Yeah, so if they don't have substantial control,
Doesn't matter if they have ownership of at least 25%, then they have to report also.
I'm
It's
just
something
saying
I wanna-
if they're engaged in offering advice to you, then that's not, they don't have control.
If they're giving you advice, it's person of substantial control, yes. They're helping you
Okay.
make advice on these decision making that in that graphic. Then yes, they have to be on your BOI. So like
Okay.
persons like us, Larry, we may have to be on a lot of people's BOI going forward.
Okay, so Paul said that the chief restructuring officer has substantial control, then they would have to be, sounds like they
Added
would
to
have.
it. Yeah. Yes, it sounds like that particular entity is gonna have quite a few people in their BOI filing.
Mhm.
One other thing I wanted to make a note of, Guy made a great point where anyone with over 25% in the business has to file this. But what if you have 5 persons who own a piece of real estate inside an LLC and they each got 20%? Well, none of them have 25, right? So who has to file? Well, the answer is all 5. Right? All 5 have to file. So 25 is just a rule of thumb unless it's equally shared, where it's less than 25, but you all have to file.
Emmy wants to know why this hasn't been making the news.
That's
Or
what I've been
has
saying when I met you guys. That's what I said when I met you guys. Like, I've been screaming the top of the mountain about this topic because I really personally don't really care much for it. I think it's a hurtful legislation.
And there is a court case out of Alabama that declared it unconstitutional. Of course, that's on appeal, so nobody knows what's gonna happen, but that doesn't apply. You can't claim it's unconstitutional at
Right.
this point and say that's a basis for not filing.
The one thing I want to say, the only caveat here I see is that whatever fees you pay to get this accomplished, it is a tax write-off. So there's your little gray silver lining. Any other questions?
Interesting. So on the restrictions, those are for the entities, not for the individuals that are owners.
You mean
or
the
what have you.
exemptions?
Exemptions, yeah.
Yeah, it just applies to entities.
Right.
As far as who has to report, then
Yeah.
the stuff you have to report applies to individuals.
Even if you have a trust that's a partner in a deal, in a company, the trust itself may not have to file, but the trustee who's making decisions on behalf of the trust in that entity has to be on the filing papers.
Hmm.
So they figured out all the gotchas. Let us know if you find any. I didn't see that.
Yeah. Okay, so we got one other question from Andrew. Should a licensee or franchisee list the licensor or franchisor as a benefactor or beneficial owner, even if they do not own a part of the business?
Are they helping you make decisions in the business? I would think yes, it's a franchise, right?
Well, usually franchise agreements are, there's a contract and you have to comply with it, but I would look at it from the standpoint of, is that franchisor really making those decisions for you? Or are they just by contract giving you direction on things that you need to decide? And ultimately you make the decisions. You're the owner, you're the entity. I don't know that I'd necessarily say the franchisor would be a BOI.
Unless they're actually helping you make those decisions.
Yeah,
then-
now, if
yeah.
they're on your board or if they're something like that.
Yeah, an
for sure.
advisor to you out, and you have a contract. If you're not going to them outside of your contract, then I would say, yeah, put them on. Put them on. Better to over than under in this scenario.
So possibly someone like a Chick-fil-A or a McDonald's, yes, but most other small business franchise, well, they would be exempt too anyways, right? If you owned a Chick-fil-A or McDonald's, you could potentially.
You got to be making more than 5 million. So it's not McDonald's, it's the franchisee ABC Holding company that bought McDonald's, right? ABC Holding has to be making more than 5 million and 20 employees or more to have that exemption.
So, Crystal and Guy, your contact information is on the chamber website where you registered for the event, but
Right. They can also use that QR code on the screen.
Okay, perfect.
Yeah, QR code has everything in there. And Guy and I will be sharing files that come out of this meeting.